This is your technical update from the LMAX Exchange Research and Analytics Desk for Friday, September 25th, 2015. Euro dollar. So the euro continues to be very well capped into rallies with the medium-term downtrend well intact, and the focus now is on a key test of next support, which comes in at 110.87. A break below 110.87 will open the door for a fresh downside extension, with the market seen back towards next key medium-term support at 108.09 further down. At this point, rallies are continued to be expected to be very well capped, with only a break back above those recent highs that we saw in the mid-114s to compromise the current outlook. Sterling dollar. So cable remains under pressure since stalling out several days back at 156.59, and the focus now is for a downside extension below recent support at 150.165 and towards psychological barriers at 150 further down. At this point, only back above that recent high at 156.59 would compromise the bearish outlook. Dollar yen. So dollar yen has been showing a contraction in volatility over the past several sessions and several days, with the market triangulating and warning of an impending breakout. At this point, given the recent declines, the sharp declines that we saw back in August, the structure now favors additional declines, with a lower top sought out at 121.74 ahead of that fresh weakness. At this point, only back above 121.74 would compromise the bearish outlook. Euro Swiss. So Euro Swiss continues to be quite constructive, and although the market has been chopping around in recent trade, fresh upside is favored towards the next measured move upside extension in the 112 area. At this point, setback should be very well supported, with only a break back below 107.14 to compromise the constructive outlook. Aussie dollar. Aussie remains locked within a very well-defined downtrend, with the market recently trading to fresh multi-year lows, and a recovery rally recently has been stalled out at 72.80 with a lower top sought out ahead of the next downside extension below the recent multi-year low just over 69 and towards a measured move objective initially at 68.30 further down. At this point, only back above 72.80 would take the pressure off the downside. Dollar CAD. So dollar CAD continues with its intense uptrend after the market broke to yet another fresh 11-year low on Thursday, trading all the way up into the 134s. At this point, the 135 psychological barrier is in sight, and any setback should continue to be very well supported ahead of the next upside extension towards and through 135. Look for ultimately the market to be very well supported above 128.60, with only a break back below this level to compromise the constructive outlook. Kiwi dollar. So Kiwi remains locked within a very well-defined downtrend, and the market is now consolidating just off those recent multi-year lows. At this point, look for any rallies in this market to be very well capped ahead of the 66 area, with only a break back above 67.40 to compromise the outlook. Look for a break eventually down below the recent lows that we saw in the 61.30 area to open the door for fresh downside into the 50s. SPX 500. The S&P 500 remains locked within a now newly adopted downtrend, with the market looking to establish a lower top at 2022 ahead of the next downside extension to be confirmed on a break below those lows that we saw in late August at 1833. At this point, only back above 2022 would take the pressure off the downside and put the pressure back on the top side. Gold. So gold has been showing impressive recovery in recent trade, with the market now putting in what looks to be a higher low in the 1100 area, which will be confirmed on a break back above recent highs that we saw at 1170. If we see a break above 1170, this will open the door for a fresh upside extension towards medium-term resistance at 1233 further up. Ultimately, only a close back below 1100 would give reason for concern and put the pressure back on the downside towards fresh multi-year lows.